Hey, this is Danielle, and today I'm going to be walking you through how I'm managing an Amazon butterfly. This Amazon butterfly is currently up a little bit more than 100%. I got into this trade on March 18th, and today, as I'm making the video, it is March 25th. So, been in the trade for about a week here, and you can see, this is up a little bit more than a double. I paid $1.08 per contract. I have 3 contracts, and it's currently going for $2.33. So small trade, risked about less than $300, and I already doubled my money here. So that's the spot where I'm generally going to look to get out. Now, just going over the trade quick, let's go ahead and start with the options chain because there's a couple different things I want to show you. Number one, Amazon has been a little bit stagnant at 180. This is because this is a key psychological value. We also have a lot of high open interest at this strike. And so that is, the primary reason why I went ahead and selected this strike as my target. So you can see here that in this butterfly, I don't know why it's a little out of order, but I bought a 175 call. Okay. Then I sold the 180 calls, and then I bought the 185 calls as protection. So even though it's kind of out of order in Thinkorswim, it goes like this: 175, 180, 185. And so the idea was, because I bought these 175 calls and I sold the 180 calls, was I wanted the stock price to go up above 175. I wanted it to go up to 180. Ideally not go through 180. And I wanted that to happen close to expiration. Now, as you can see, there's 3 days left on this trade. So within 3 days, I think that's perfect. Because I got into it last Monday, and it had 5 days to mature, and it also had that time to move from here to here. That's why you're seeing that it's up 100%. Now, people will say, okay, well, what's the max profit on it? The max profit is always going to be the width of the spread. So if there's $5 here, between strikes, the max it can be worth is going to be $5. Right now, you can see that it's worth $2.31. So you might say, well, why would you close it for 231 if it could be worth 5? Well, because I'm not trying to, get it to the exact target, the exact day of expiration. When that does happen, it's awesome. It's usually easier to do if you put the trade on closer to expiration. In this case, I put it on 2 weeks before expiration. So, the reason why I'm not going to hold it here is because today being Monday, the likelihood that it stays at 180 for 3 more days is just not very good. Um, I don't want to risk, losing the money that I already made because I'm trying to be greedy and, hope this trades up into $3, then $4, then $5. If you want to do that, you definitely can. That's the only way to get the pin. When you have this high open interest, it is common that you'll see the stock trade around that strike. So if you want to be a little bit more patient, you can. But let me go ahead and show you the charts. So the reason why I initially got into this trade was because Amazon had a breakaway gap after earnings last quarter. Amazon has earnings coming up pretty soon here in April. So I was looking for a move going into earnings, but also because it had these multi-time frame squeezes. So I got in on the 18th, which would have been this candle right here. We had a slight dip. It really wasn't enough to go down to the 21 EMA. But it was pretty close. I do prefer my entries at the 21 EMA, which is this green line, or the 34 EMA. But pull back to the 8 was really all we could get because this is such a strong chart. Now, when I first made the video saying I was getting in, people were saying, you're crazy. This isn't going to keep going. All these are way too overdone. But I'm just trying to show you that you don't need it to, explode all the way up here to trade a butterfly. All you need is just a nice little creep higher, and you just need it to go up above your first long strike. So when I got into the trade, Amazon was just below 175. So I placed the first strike just out of the money with the idea that not just the daily squeeze and not just the run into earnings, but also these lower time frame squeezes would push the stock higher up into my what I like to call the stack profit zone, up into my target. So as you can see, that has happened. You can see this little creep on the lower time frame chart. You can see the moving average crosses. You can see the volume coming in. It's just a bunch of different reasons. Now, you can also see that it's getting pretty overbought at this zone. You can see that it's getting a little sticky. You have a wick here, you have a wick here. So sometimes with these flies, if I can see that it's getting sticky right around my target, I might give it a little bit more time so I can get more decay on my fly, because that's how you make more money. So if you look at the butterfly, you can see that these strikes that I have sold, there's 6 of them, okay? When I originally sold them, they were going for $1.17. Now, because we're just over 180, they're going for $1.68. So that's not ideal, because what you want in the butterfly is you want the strikes that you have sold to decay. You want them to go down in value, because that premium will go into your account. So in this case, the money that I'm making is primarily on the long call. Okay, so we have these 175 longs. I bought them for 305. Now they're going for 542. So that's where you're making your money there. So the question here is just, do I hold it longer to try to get theta decay? You definitely can, but the way that this would go wrong is if it bursts up through 180, okay? Because the more that it goes through 180, the more that these options are worth. And you sold them, so you do not want them to be worth more, okay? And what will happen is that if those continue going up in value, the money that you made here will be going down in value, because it's going to take away from your profit. Okay. Not because this actually goes down right here, because that strike wouldn't go down, but it's because it would take away from your profit. Okay. So, moral of this whole story, what am I going to do? How am I going to manage it? Well, I'm going to close this. I'm going to say, thank you, Mr. Market. I'm going to take a screenshot. I had a butterfly that it wasn't a perfect pin, just because we're still 3 days till expiration, but it was pretty dang close. Within 3 days, I'll take it. So I'm going to create a closing order. I'm going to sell my butterfly. I'm going to sell that, see if I can get filled. 230 something. Okay. See if I can get filled. Now, if I can't get filled, I usually just adjust my order. You can right click on it. You can click view order. You can do cancel replace, and you can just see what you're bidding versus what it's worth. So I'm bidding 233 right now, and the range is between 225 and 235. So that's just why I didn't get filled immediately. If you do want to get filled immediately, like for example, if the market's about to close, all you want to do is just unlock the little box and you can bid down a little bit. Generally, if I have time, I'm going to try to get filled at the top end, because obviously I want to make more than less. But you can also just bid it down a little bit to get filled. Let's try 229. Okay, and I'm filled. All right. That is my management of the Amazon Fly for today. I'm going to make another video about Meta coming up here soon. I think this is a good example of one that I still have on, but it has come up, it's hit resistance and it failed. So I'm going to make another video for that one. Stay tuned. I really appreciate all your questions and comments down below. I'm also going to be sharing a ton of new setups coming up for earnings season. So I hope to see you in the next one. Make sure you like and subscribe if you want more videos like this. Bye.